Okay, well, let's look on to the normal proceeds, which are starting off with data released over the European session.
Okay, well, first of all, we had a raft of inflation data from the UK in a variety of measures. I've picked out just 3 of the data points here. So first of all, what on the face of it looks quite positive, although it's the retail price index, the slightly discredited version of inflation as far as the powers that be are concerned. But UK RPI for August up 0.5%, ahead of the forecast of plus 0.3%, and well ahead of the prior read for July of minus 0.1%. So if you're the Bank of England, the MPC, you're looking to try and stimulate inflation in the UK, you take that, I think, as a positive read. Then if you look at CPI, that's one of the preferred measures of inflation. This is a number for August. Again, this time we look at the year-on-year data. No change. 1% is what we came in at. That was exactly in line with the forecast of 1%, and in fact, slightly weaker than July's 1.2% growth. So confliction or conflict, I suppose, between the RPI and the CPI data there. But then if you took a step back and looked at some of the PPI data, this is a data point probably very few people look at any great depth, but this is UK PPI input prices for August. This is on a year-on-year measure, so this August 2015 versus what things were like in August 2014, and look at that, minus 13.8%. So factory gate, so the input costs of goods and services the factories are buying to make things are down 13.8% over the prior period. That's slightly worse or better, depending on which side of the line you stand, than the 13.5% fall that was forecast, and the prior read in July of minus 12.4%. So on the face of it, reduced input prices sounds good because it should mean cheaper finished goods and services to consumers, and in the short term that's possibly true. But what it means longer term for businesses is running down of inventories, no reason to hold stock, problems along the supply chain, because why would you hold on to something that could devalue 13.8% in a year? So that just shows, I think, the task the Bank of England have, and how difficult it is to square this inflation circle, and why interest rate rise decisions are so problematic.
Well, the other point is that the manufacturers or somebody doesn't seem to be passing on this wonderful cost saving to the consumer.
No, so that might be good for margins in businesses, and therefore perhaps for shareholders and their dividends, but it's not, as you say, not necessarily being reflected in prices to the underlying consumer. And if we then jump over the channel and look to Germany, we had the ZEW surveys out for September. I've decided to look at the economic sentiment number for September, and the read came in at 33.3, well below the forecast 42.1, and again sharply lower than the prior month's 47.6. So I guess it's not surprising that economic sentiment should have taken a bash after the last 4 to 6 weeks that we've seen with all the upset in China. Nonetheless, it's a very sharp deviation from what was forecasted, and obviously an even bigger one from the prior positive read of 47.6. So lots for the German economics ministry to
I think it's
consider there.
amazing. I don't think I've ever seen such a big difference in the number month on month. So you would have gone for 42.1 just on the basis it's 5 points lower, but that's about the most you would have gone for really there. But